Well, the dynamics we're seeing in financial markets are moving around seemingly on a dial at the moment. Beginning of the week, we had seen sentiment improving. We'd seen risk assets doing quite nicely. In fact, we actually saw base metals yesterday working out quite nicely. But we had been expecting equity markets to build on this momentum that we've been seeing. And I think overnight, we've certainly seen a leg down in sentiment and a clear deterioration there coming through. This time, obviously, not premised on conflict or the potential for conflict between Washington and North Korea. But this is very much about the Trump administration. Of course, we've been focused very much on the disbandment of the Manufacturing Council, the various business councils we've been seeing, with various members leaving that council, and obviously Donald Trump taking the initiative to disband that council. And clearly his relationship with the business leaders is deteriorated based on some of the comments that had been seen from the Charlottesville riots we've been seeing there as well. And of course, business leaders wanting to distance themselves from that situation. The talk overnight was clearly around Gary Cohen potentially leaving his post as the National Economic Director. And that's really worried a lot of people out there. He's got a lot of respect in the markets, but it's not just him who's been reportedly unhappy. And he'd been talked about in July as saying that he would probably leave his post should we see a situation where tax reform doesn't get up. And it clearly looks like tax reform is going to struggle at the moment if it goes up at all. And if we are going to see any kind of tax cuts, it's going to be a few bits and pieces here. It's certainly not going to see the widespreading tax reform that Donald Trump had been talking about. So there is obviously an elevated risk that we do see Gary Cohen leaving his post. And I think people are concerned that some of the good members around Donald Trump could be leaving their post going forward. And we're left with something that resembles Steve Bannon, his chief strategist, and his very much protectionist measures, and talking about a trade war with China being very close. As we sort of remove some of these good candidates away and leave ourselves as close to Steve Bannon as possible, the markets do suddenly become a lot more vulnerable, and I think that's what we've seen. So the rumours overnight, and certainly some people focusing on a CNBC article or interview with a professor from Yale who's talked about markets, and the reactions if Gary Cohen was to leave, although those were clearly refuted by certain members in the press who said this is not going to happen anytime soon. They have shown some vulnerabilities about what the administration would look like in that situation. And the S&P's dropped 1.5%. We've seen tech really under pressure there. Energy, high beta names coming under sizable pressure. You've seen the implied volatility ramping up about 30%. So you've seen the VIX moving up to about 15.5%. We've seen demand again for the Japanese yen. You've seen longer term fixed income yields moving lower to 10-year down about 4 basis points to 218. You've seen real yields moving lower a little bit, and of course that's propelled gold. So we're looking at that 12.95-96 level again. The market here in Australia is clearly going to feed off that. We're going to see our market open 40-50 points lower. This range that I've been banging on about for some time now, 5,800, 56.75 is once again being respected. It's one of the easiest moves we've been seeing for a while. Just faded into 5,800, look to buy it back at 56.75. That seems to be very much in play, and we're going to open in the sort of middle echelons of that range again today. And the market internals are very neutral. We see no reason to see the market breaking out there again. But it's going to be a risk aversion day in Australia. You're expecting those fixed income yields to move lower. You're going to see not many companies report. I think we've got 4 companies report, but primary healthcare probably the one which maintains the focus there, although we don't expect to see a huge amount of appetite from our clients to trade that today. It's going to be more about the big moves you're going to see in mining, energy stocks, the risk aversion moves you're going to see playing through again. But people are asking questions. We've seen this big move down in the US markets based on really what was speculation and intrigue and a view about how the administration is going to look like, not with the business council moving away from the Trump administration, and also what life would would be potentially without Gary Cohen, but there's nothing tangible behind that. It's just a lot of speculation, and the market's getting a bit concerned about this at the moment. Not really much to drive in the session ahead. As I say, earnings are coming in thick and fast, but it's going to take a bit of a backseat today. We've seen about 30% of companies report so far. EPS growth has been okay, about 5-6%. It's started to trickle higher, which is good to see, but I don't think we're getting that inspiration with about 40% of companies beating so far to give us that re-rating and drive us out of this trading range we've been seeing. Have a look at the Japanese market today. We've seen dollar yen moving sharply lower as the yen has been sought, specifically against the Aussie and against the euro as well, where we saw those minutes coming out from the ECB suggesting that the ECB now are quite concerned or growing more concerned about the euro strength at the moment. So that's put a cap on euro buying. So an interesting day ahead. We've got to keep an eye on what's happening in this US political situation because it's coming very, very interesting indeed.